David, thanks for the book.
You're welcome.
Appreciate it. Successonomics. So you just saw that video from CNBC talking about GDP going into 2015. What do we have to expect coming up in the market this coming year?
Well, you know, once I heard Eisenhower said, I wish I had a one-handed economist, because on the other hand, right. And like weathermen, you can't predict weather or the markets past probably a few days, a few weeks, maybe a quarter or two. So it's so hard. I mean, it's so difficult to say. Really, I say we're the prettiest girl in the ugly contest. The world economy is tough. To give you an example, just today or yesterday, actually, Russia increased their interest rates, which would be equal to our 10-year bond rate, to 17%. Okay. You have Japan that's in quantitative easing. You've got the Eurozone that's having trouble. So it's tough to really say how much effect that other economies are going to have on ours. So that's kind of my take on it. It's just too early to tell. And so, you know, I'm not a big predictor of markets. I'd rather be a protector of people's capital.
You know, on the radio show this week, you were talking about how birds flock together. I know that you wrote a piece on this for, I believe, your website. Explain what you meant.
Well, there's this concept actually called murmuration, and this is not the Nature Channel here, but this is actually a beautiful video. And I saw this, and I actually looked it up, and these are actually starlings, and it's actually a law of nature, and it's the herd mentality. And the reason I thought about it is because, and these starlings are actually avoiding danger like hawks. And so, you know, I look at it as like the danger of markets and the herd mentality of markets. And it's really the psychology of people. People would rather fail conventionally than succeed unconventionally. So herd mentalities are what hurt people. That's why people lost 50% of their nest egg in the 2008-2009 crash. That's why people lost a lot of money in the early 2000s. So, you know, we as a firm, you know, we want to do things unconventionally. And that means, you know, educating people on alternatives to ways to protect capital. Right now, oil is really the theme. You've seen oil go from $107 a barrel, now down below $54 a barrel, the first time since 2009. And what was 2009? Recession. So the difficulty is, it's great that we're having gas prices which are so low and probably going to fall further. But the problem is that is a big disconnect. Usually when you have low oil prices, that means low demand, low levels of economic activity.
Well, David, we had a great segment on the radio show on Tuesday this past week. I want to remind our audience that we upload all of those to our website. We're going into the end of the year, and I can't think of a better time to connect with you for that second opinion that you do offer to our audience. It's tax planning time. You don't wait till April 15th next year. You get it planned now. David can reduce your tax liability in many cases. We've seen this quite a bit. He can also do a review, make sure that you're not exposed to what's happening with oil prices. Here you can see his website, reyesplan.com. You'll also notice that David hosts his own radio show on Sunday mornings on KFNB. We also feature him in Premier Magazine and Pacific Magazine. So David, always great to get the Reyes report from you. Appreciate it. I hope people are smart enough to visit reyesplan.com. Thanks again for the book.
You're welcome.